The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock until noon, and today being April the 4th. And we had the jobless number, and evidently it was received initially very, very well by the market. But I'm going to discuss a bunch of things that are telling me that regardless of what is happening intraday, we are very close in time and price to some kind of a topping formation based on a number of stocks that have done extremely well, but basically are in leg D or E. And I'll get into the technicals of what that means for those of you who are perhaps new. It's a very exciting period. It's an exciting period because there are some stocks, in a sense, are ignoring the general market, the momentum sector of the market, and are just steadfastly moving higher. So with that in mind, let me just mention a couple of things here. If you go to the front page of TFNN, this is the last day to be able to activate your, to sign up for my Master Trader Series Level 2 Chapman Wave full-day seminar, 8:30 to 4:30 tomorrow at Babson Executive Conference Center in Wellesley, Mass. Great venue. We're really looking forward to it. It's going to be exciting. I've actually printed up a couple more PowerPoint presentations in case there are last-minute enrollees. Now, what it requires is this. You cannot just come to it if you want to learn the Chapman Wave for the first time. Absolutely not. What you really want is to have done some work with the Chapman Wave. You need to have attended maybe a couple of my webinars, maybe my level 1 Chapman Wave methodology seminar. I would recommend that if you're interested in doing it, that you do have my CD introducing the Chapman Wave methodology. If not, I will bring it to the seminar for you to study. It's very important. But what's really interesting about this particular seminar at this particular time is that there are certain characteristics in the market that I'm going to talk about it in two ways, both psychologically and technically. And I would venture to say a little bit, it's not my area of expertise, are the fundamentals, but fundamentally that I'm going to be discussing and relating it directly to chart formations and different parts of the market as we rotate through this corrective period. What is a corrective period here? This is a corrective period. Areas that have gone soaring for ever, up to new highs, that have taken on a lot of water to the downside, like the IBB, like the momentum stocks, like an Amazon, which is down 12 points, down 321, having hit a high of 408, is now trading at 321. That's 88 points, and that very unusual. But I've been talking about many stocks making hat-trick tops. And I think that when you get the momentum stocks becoming vulnerable like this, you have a tendency to see them drag down even the best of the best. So the best of the best might rally a little bit, but not as much as they normally would, or they are in their own independent orbit. I'll give you another example here. If you're looking at this, here's a question. Look at the UVXY. Question in the den. What about the UVXY? Well, that's the 200%. That's 200% long the volatility index. Now, I think that as a precautionary measure, if you want to hold a portion of something like a volatility index or an inverse ETF at this particular point, especially if you have a portfolio of stocks that you'd like to keep and you want to protect them. That's number one. If you want it as an absolute out-and-out direct play, Then what you want to play, I mean, as a counter trend play, because this has been going down, down, down. Now it looks like at least there should be a pop-up in the UVXY or the volatility index. If not now, sometime next week, and you have, for instance, I might, I've done this periodically, where I will buy this, sort of kind of protecting portfolios, etc., family stuff, and I will buy this just to have, saying, you know what, I'm prepared to lose a little bit on this, because if I'm losing on this, it means I'm really making much more on the upside with the stocks that are being kept as a longer-term buy and hold. So in this particular instance, I don't see any reason why you should not have treat it as insurance right now, even if you're treating it as a trade. This is probably your very best chance, and let me explain why. In fact, I'll go through, got a couple of other questions there in the den. FDO, I didn't finish looking at the chart of FDO. That was one of those. I'm just going to do that now. FDO, the reason why I want to do it right now is because I would not be looking at FDO, which is Family Dollar Store, right at this moment. I'd wait to see how this 200-period exponential moving average is sitting on. Family Dollar Store is trading at 58.88, down 86 cents. And it's gone to trough A, trough B, trough C, trough D, trough E, trough F on the downside, even hard to say, with a stochastic at 9.98% trying to make a V-shaped turn, and the MACD saying, hey, I could have a little bit of a bounce here. So there are two things that I would do. This is a typical stock that was in a bull market and now has gone to that arch formation. The left side, it's almost like a left side, right side price time match to the left side low of 57.50 back on the 5th of April a year ago. Isn't that, I love the way, the symmetry of the market. I think that's what keeps us here as hosts at TFNN, besides the trading and other things that we do. Just the fascination, the daily challenge, the intrigue, the way of putting all your techniques. I talk about the Sears and Roebuck huge toolbox. You want to have everything in your toolbox. Well, in this particular case, the 200-period moving average is in my toolbox. And I'm looking at it and saying, hey, it's trying to have a rally. It's in a downtrend. Monthly says, whoa, we've got to be careful. So I would only treat this as a short-term trade if you wanted to go long. And I'm going to make the suggestion right now. It's up 0.93 at 58.95. This is the kind of a counter-trend trade in this particular momentum weakened market. So you want very steadfast kind of stocks. I'm going to suggest that if you are long, stay long. If you are long, you could nibble on this at 58.95. I would not have, I'd have the low of today, 58.13. I'd have a 58 stop, a 1-point stop on a $58.94 stock. Why? It's acting well. If it has any strength next week, it should challenge the high of 59.69, the high of the 25th of March. And if it can hold above that, it says a counter-trend move could have fund managers looking for the safety of stocks that have been good performers before, and they might not look at the chart and say, oh, my goodness, an inverse M formation, which says definitely there's a great chance that it's going to test the 54.06 of February of last year. But in the meantime, I treat it as a counter-trend bounce. If you're looking at it as an intermediate-term buy and hold, I don't think this is a stock that's going to come and retest the 57.42. 200-period moving average of 57.28 low made last week. But just as a counter-trend bounce, if you're in it, I'd put a stop at that 58 level, 59, 57.98, somewhere around there. And all I'm looking for in this particular instance would be a counter-trend rally against a market that might become quite choppy over the next couple of weeks. So here we go. So that's FDO. Now, other questions I'll get to in a moment. Oh, wait, GMED, I can't resist. GMED, is that a medical type stock? GMED. GMED is, GMED is my 120-minute chart. Globus Medical Inc. in leg B, very strong B in the monthly chart. IPO came out, it went down all the way to 10.26, and now the high 2 weeks ago was 27.14. So you know what I'm going to do? I'm going to put this on my list. In the next break, I'll actually do the work on that. Now let me just go through all the numbers. Dow's down 8, but the Dow has made an all-time high today again. And let me just do this here. Indu. Yeah, made in leg D. You see, this is why I'm a little bit cautious, only a little bit, and I'll tell you why I'm only a little bit cautious. because the stochastic's at 94%. And it's just worked its way up there. Usually it doesn't go to 94% and then just reverse immediately. It has it has a kind of a bounce and then holds steady as it did back in the middle of February. So I'm looking at this and I'm saying, yeah, you could pull back a little bit. There are enough rotational stocks in the Dow that says it could hold quite well. So leg D, maybe a peak D by Monday, and then 16,465 to 16,417 will be key support. If it breaks that, that's a problem. Let me do something else here. So I just wanted to say the high today was 16,631. Let me type that in because I'm sure we're not going back there. 16,631. I mean, we're not going back there today. And it is leg D. So it makes me a tad cautious. Now, the next thing is, in looking at the Dow weekly, is this a leg E or is this a brand new leg B? I'm going to wait until Friday, this Friday, wait until 4 o'clock, and probably I'll want to wait until Tuesday of next week. If there's no new high by Tuesday, then I'm going to have to say, okay, watch real closely because 16,280 is the level of support you want to be watching on the 9-period moving average in the weekly chart. So here are the parameters. The S&P right now, the S&P was kind of dragged up. It went to another all-time high today. It went to 1897.28. I've got this as an alternate counter leg F/C. Now, if you look at this, there's a kind of a W pattern, but it's also, if you wanted to look at it as a butterfly pattern, you've got, I could do this. Let me do this just here for those of you butterfly fans. And there's some very nice butterfly museums here in Massachusetts. Actually, the Chalmers Museum has a section. There you are. So there's a little butterfly, and we're looking at it. But the stochastic's at 91%. The MACD is good. Not great, but good. So I'm going to give it just a little while. 1877, a break under that breaks the 9-period exponential moving average. And the upside, in both cases for the Dow and the S&P, I'd say a little bit higher than this over the coming days if there is a nice stable close today instead of being down 35 points in the Dow, down 4.5, 5 points in the S&P, manages somehow to close up 15 to 20 points, and the S&P closes up 1. I say, yep, it's topping motion, but there's a rotation going on that you've got to respect that can last just a little longer. And now we're looking at the weekly chart, and that says, I don't know how to count it other than to say it's in leg C in the weekly chart. That leg C is saying that there's tremendous support in the S&P at 1853. It's at 1886, down 2.5 right now. That 1853 level to about 1847. That's going to be key. A break under 1847 in the next week or so would in fact say, hey, you might be pulling back, but you've got to respect that other charts are not in a leg C. Now, the New York Stock Exchange, I'll talk about these others when we get back. Suffice to say that the comp index is down 50. Not good. And I'll be right back. Basil Chapman, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just finish typing this. G Global LNG Limited. All right. So the question was, what about GLNG, which is Global LNG Limited, a natural gas exploration company. It's Gazprom, and got the U-shaped pattern. It's got the let me put this down in my notebook for tomorrow. What have we got? GLNG, the H pattern. I want to talk about this H pattern, quite a potent pattern. It's the lowercase h in the monthly chart that goes from the peak E top at about 47.82. Round number 41 close in January of 2012, pulls back to 31.71. May of 2012 makes a peak A, B minus because it fails, goes to a lower low. That lower low comes in July of 2013 at 30.51. Then it goes peak A, B. It's in leg C underneath the previous high. If it has 43.56 was the previous arch high. 43.95 was the high in March. If it goes above that, there's a real good chance it's going to retest the highs. That was back at the 43, I think it was level. 47.82 level. However, the weekly chart has the same kind of pattern, and it's gone up, and it has to be a continuation pattern. So this must be called a potential peak E today. It could have restarted and still would be a D. So it's getting to the level where it's the stochastics at 85%. That's good. MACD is still very strong. So it's how the daily responds on any pullback. And right now I've got it as a peak C in the daily chart, having hit 43.94. and it's walking the 9-period moving average, but it looks like it might take time. So I'm suspecting with the pattern that I'm looking at, there will be one quick spike above 43.94, and that has to happen by about Wednesday of next week. How it closes after that is really important. It needs to then turn the whole 42.70 area into support so that it can push higher, and that's leg D, but it has to turn the D into this cup formation that is really a perfect stair step. Big move up, sideways consolidation, giving back out half the gains. Big move up, sideways consolidation, giving in this case a little more than a third of the gain. 2/5, let's say. So this is going to be very important. Not a great session today, but it's above the 9-period moving average. So the question is, I don't know if you're long, if you're just looking at it. If you're wanting to get in, I would rather buy strength. I'd rather buy it at 42.96, a smaller position, because you've already given up a point of gain. So I'd rather buy it above the high of 42.83 made on the 3rd of April than to buy it down here, and I just wait. I'm expecting D, but you know what? The pattern is one that says I'm running out of time if I'm going to keep up the same kind of consolidations I've had before. So if you're in it, I'd put a stop on some part of my position at 41, around about 41 to 40.93. But if by Monday or Tuesday it starts to move higher, I'd add to the position, a trading position, if it went above 42.83. I'd also start a new position there, but all you're expecting then is to go above 43.94, and then you have to wait again to see how the test comes in. So if you asked me, would I be buying it? I'd probably say, you know what, at this particular point, no. I'd be waiting for some other things to happen. It's a good-looking stock, at least for now, in consolidation, a huge rectangle formation between the lows and the highs. It's kind of in the middle now. I wouldn't be playing it. So here we go. The next question would be XOM close to leg F. Let me see. XOM was acting very well. I just want to see if I didn't miss something here. No. Okay. So here we go. Wow, we've got callers online. We've got Garo in Newport Beach. Garo, how are you?
How are you, sir?
Very well, thank you.
I'm calling regarding Visa.
Yes.
I shorted this at $213.50 this morning on 30 minutes. And I just got out of it about 10 minutes ago before I called you at 208.50.
Wow.
It was very good trade. I just got out, and now it keeps going up on 5 minutes and 10 minutes. It gives me the conviction, that green arrow, to get out. My question is that on a monthly chart, it's very close to $202, $203. You think it will get there, or before than that it will just turn around and go higher?
Well, my subscribers, I think, are going to be upset with me because I pinpointed Visa, MasterCard, and American Express, but it's particularly Visa, as one of those that I thought was doomed to go down and retest the left side low of 211.38 made in the week of the 7th of February, and it's just done that. It's broken it. So give me 1 second. It's a very important question because it might be a monthly hat-trick top we're looking at here. I'll be right back, folks. We'll be back with Garo, John, and another John straight after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. I've got a couple of emails as well, but let's just do a couple of things here because we've got Garo online from Newport Beach. Just had a fantastic trade, shorting Visa. Pap, he just a real quick chunk of change he made there, and that's really good. And now I'm looking at MasterCard. So you remember when we spoke about these about a week ago, what I was saying is that there's the pattern that I talk about a lot. It's the H pattern. Looks just like the lowercase h. I'll just draw it right in here for those of you looking at Tiger TV. Let me see. Yep, I can see it very nicely here. It looks like this. There it goes, and there it goes. So there, that lowercase h is really important. Why? Because if it takes out the left side low bar and breaks down, that could be a one-to-one move from the arch of the top of the h itself, not the big leg down, but the curve, the arc itself, and that could give you a one-to-one move to the downside. So I'm watching this really closely. So that's MasterCard looks vulnerable, especially if it takes out. It's trading at 73.25 MA down at $1.28. So if it takes out 71.75, that area of January's low, that's just not good. Not only that, 72.04 is the 9-period moving average in the weekly chart. Now, it hasn't given a signal in the MACD. It hasn't crossed negative yet, but everything else has dropped very sharply. And here's the other one. So we're looking at Visa. Visa's already broken the left side low, and it's going to the 203, as you mentioned. That's a very important level for me. The 200 205 area, 206, 205 is the 9-period moving average in the monthly chart. I suspect it could test that pretty soon. And the only other one missing here is American Express. Now, they're all kind of different in a way. American Express has held up a little bit better. It's a Dow stock. That, to me, was not the choice for shorting. Would have been Visa, because that's the one that I mentioned. Never did that. You did it, Garo. I have to congratulate you, but you know what? There's a chance that you're going to be able to do that with Visa a couple of times over the next week or two. So let's see how it bounces. And I would say to you, just keep your eye on Visa. I think you've got the trend right. And the most important thing with Visa, Garo, is you're out of it now, right, with a nice profit.
Yes, sir.
So
I'm out of it.
You will not be doing anything until you get your next signal. And I suspect the next signal might come if Visa tries to rally back. It has to. Actually, it's already done that. But now it's broken down, and it has to. Now the big resistance is going to be 218.16, the high of 4 or 5 days ago, because it's broken underneath the left side low of 211.38. Very important. I think this is going to be shortable on bounces, and I think you've got your eye on the prize here. I have to congratulate you. Fabulous trade.
Thank you, sir. Thank you.
And thanks for bringing it to our attention. Thank you, Garo. Let's go to John in Jupiter. John, how are you?
Great. How are you this morning, Basil?
I'm very well, thank you.
I'm calling you back on RWM. I took a position right around the 1640, 1635. I've got to stop right at about 16, figuring if the IWM makes a new high, I would cover that. But, you know, I would sell it. In other words, it's the short.
So what we're looking, folks, is the RWM, the ProShares Trust Short Russell 2000. So that's 200% short, right?
100.
This is one. That's why I looked at RWM and I said I've seen it very few times and I couldn't remember. I must write that down. 100%. Okay. You know, that's a really nice, safe way of doing things. One doesn't have to grab all the 200 and 300 percenters. I think that in this particular context, the 100 is exactly right, because if you were trading the 200, the 300%, there's a little bit more of a responsibility to kind of monitor it all the time. In this particular instance, because the IWM has shown so many strong signals, IWM is trading down again today. It's down $1.26 at 115.95. It's made a single leg A up, and it's pulling back from that. And I will be spending time tomorrow at my seminar talking about these single leg A failure or success patterns. And in this particular instance, my biggest concern in the IWM is that the weekly chart, MACD, deflected lower, and the stochastic's now at 74%. I don't have a signal yet in the monthly chart, although it's in E. Now, the signal that I do have is that the long-legged doji that we're looking at from last month with a high of 120.58 and a low of 130.69 tells me that we're probably going to test the lower level. And that makes it in a trading range. If it breaks that, then 111.37 is the 9-period moving average support in the monthly chart. I think you're in a very good situation right now. But the only thing I would say to you is, I don't expect it, but I do always want to give the other side of the coin. And the other side of the coin says that if the first of all, if the IWM and the QQQ series are giving me sell signals in the monthly chart, well, a sell signal is already in place. It's a sell mode if it closes ugly today. I don't see how the Dow or the S&P or even the New York Stock Exchange can independently move higher significantly. They can have moves to the upside, but it's telling me to be very careful because the Qs have got this failure pattern, single leg A up, and the almost certainly by the end of the day, I will have a sell mode signal in the weekly. That's far stronger. Nothing yet in the monthly chart. I think you're correct. I think you're in the right position, and all I would say to you is some part of it could have a stop if the IWM bounces between now and Monday above 117.35, just to say, hey, be a little careful, because the candle that we're looking at is the very deep candle from last week, a very ugly one. That's when the IBB fell, and it affected the IWM as well. So I'm looking at that, and I'm saying it could be stuck in the range for a little bit, but everything about it says that if it closes underneath, let's see, 116 today, that'll be under the 9-period exponential moving average for the second time in 2 weeks, and for the second time since it made the high 5 weeks ago. I think you're in the right position, and I think the upside is quite limited right at this particular point. But as I say, just some part of it, I'd say, you know what, you get to about 117.35, you could bounce deeper. I don't think that's going to happen. So congratulations, you got yourself a nice position there.
All right, thank you, Basil. Have a great weekend.
And you too. So, and what I would say to you is, if by Tuesday there is a bounce in the IWM, because it's gotten to a little oversold condition, and it starts to show some kind of support, and it gets back to 116.78, give me a call and we'll look at it again together.
Okay, will do.
Thank you, John. Have a great weekend. Let's go to John in San Jose, California. Hi, John. How are you?
Hi, I'm doing great. How are you?
I'm very well, thank you.
Great.
You'd like to look at?
Yeah, I would like to look at the gold. Want to know whether it is already bottomed or not yet.
So if I'm looking at the GDX, is the GDX what you would trade? What?
Yeah.
What do you usually trade?
The GDX.
The GDX. All right. So the GDX right now is in leg C. This is the gold vectors, gold, is it gold minus ETF, right? Gold vectors, gold. Oh, the market vectors gold minus ETF. Now I got it right. And the monthly chart is still lousy. The weekly chart is not great, but the daily chart is saying, hey, I could have a little bit of a bounce. And if I have a bounce, that's further than where it is right now. Then the candle that I'm looking at is the candle of the 24th of March with a high of 25.22. The stochastic has gone from the single digits to 17%, which is good. I prefer to see it over 20%. And the MACD is turning up in the daily. I'd go one step at a time. So all I would say to you is, do you have a position at all now?
No, I'm going to get in.
Okay. Because gold is rallying at this, oh, did I do the numbers? No, I didn't finish doing the numbers. So gold right now, the GLD is up $1.70 at 125.61. Gold is up 20 at 13.05. Now, because gold is rallying under these conditions, I'm going to sanction a buy on the GDX, and I'm going to say to you, I wouldn't get carried away, but I would definitely get a position. I probably want to have a little bit more evidence that gold is going to continue higher, although it was getting to a point of quite good support. Let me just show you. Yes, it was getting to good support in the, here we go, based not on based on anything you could really see in the chart unless you went further back. And the high that was peak D in the Chapman wave on the 27th of January at 1280.60, that was the level that I was looking at to see how it would hold. I meant to actually draw a straight line across there because it's what I call a silent candle. If you were looking, you wouldn't really see that unless you were looking far enough to the left side. And what happened? Gold came down, the contract came down to $1277.40, $2.50 below, and now it's turned around. So I'm going to say to you, based on the 120-minute chart in leg ABC, 1C2, brand new AB. I like it, and 1310 would be a really important area in gold. If over the weekend, gold is very high on Sunday night when the futures open, then what I would say to you is, at that particular point, that'll be confirmation that probably Monday would come in and the market is going to be lower and that gold will be higher, and it's being treated as a safety factor. So a safe haven in gold. And let me see if bonds, and bonds, the TLT is up 89 cents at 108.63. So I would start a position here, and then we've got to see that first, that'll be peak B. So we've got an A in gold. I don't know, do you track gold as well, or you just use the indexes?
No, I track gold as well, yeah.
Okay, if you're looking at gold, you'll see that this bar that we're in the daily chart if, in fact, there is a pullback, 12.99 would be the 9-period moving average support. So if this holds 12.99 through the rest of the day into Sunday night, and remember, Friday is usually when gold is weak, so this is very strong action for gold. I'm going to recommend you start a position here, and by Tuesday you might be adding to the position. We'll see. So I hope that helps you.
It helps a lot. Thank you.
Thank you very much. And call me maybe Tuesday. Let's look at this again. Thank you, John. Let's go to Brent in Martinez, California. Hi, Brent. How are you?
I'm doing just great, Basil. How about you?
Very well. Thank you.
I'm calling about Priceline today. I'm short from 1270 with actually a May 1225 put.
Oh, that's great. Okay, folks, we're looking at Priceline, another one of those stocks that I spent a lot of time about 2 weeks ago saying, whoa, what's with my voice? Let me just take a sip. There you go. Saying that there's a chance that this peak E in the monthly chart, well, this leg E, could become a peak E in the Chapman wave. I didn't see any chance of a restart, an instant restart, making this an A. Everything about it, from the stochastic to the MACD flattening out, says it could become a peak A. And the weekly chart then made a peak D. At that minor double top, it went to 1375.41. It sounds almost like a futures contract. 1375.41. And then it went to 1378.96 on the 7th, the week of the 7th of March. Now it's gone below the 9-period moving average. I have a target that if Priceline takes at 1156 next week, then there's a real good chance that it's going to come down into the candle of the 7th of February that has a high of 1196 and a low of 1103. It'll come somewhere into that candle. That's going to be absolutely critical in the monthly chart. Now, on a daily chart, you've got the pattern that I often talk about. It's called the single leg A up. In this case, it went to 1263. Oh, it made it B. All right, well, it still looks like a single leg A, even though it's really a B. And that, to me, looks like a failure pattern. I'll just tell you this. You've got a fabulous entry, and I think it's going to be a fantastic position to have. This is for when? April or May?
May.
May. Oh, I think that's very good, because the way it's looking right now, if at any point in the next 2 weeks, Priceline takes out 1156.41, none of this, of course, is bullish action for the general market. If it takes out 1156.41, then I don't even want to talk about it. But the low of 11,003 back in the 5th of February could become a target, because 1095 is the 200-period exponential moving average, and my suspicion is that at some point Priceline is going to go for that 200-period moving average. I don't know if it's going to have a bounce first or not, but that's the way I'm seeing it. So, yeah, I think you've got a great position for that. The only thing I would say to you is, if it gets towards the 1162 to 1156.41 level, that was the low of the 27th of March, and it holds, you could see a pretty darn good bounce. So some part of your position, I would definitely take off. I'd start taking it off at about 11. If it gets there, 1166 is where I'd start taking off some of the positions. But I think looking out into the end of April, I think you've got yourself a great trade. Congratulations.
All right, thank you very much, Basil. Have a nice weekend.
You too. Thanks for calling, Brent. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. DirectionShares.com day. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Basil Chapman. This is the Tiger Technicians Hour. Don't forget, we've got a great program all day, and we've got Nico DeHaan and Paige Clark next with Living a Primal Lifestyle. It's going to be my pleasure, my honor, actually, to be back at 4 o'clock till 6 o'clock, sitting in for Tom O'Brien. This should be the end of the day. Should give us a great deal of information, and we'll be able to assess it and look at the weekly charts when we're done. So I'm looking forward to that. And of course, don't forget to go to the front page of TFNN. There's still time to sign up for my Chapman Wave Masterclass here at the Babson Executive Conference Center, Wellesley, Mass. Just call TFNN. We'll get you all organized. And if you have a question as to are you ready for this particular level, just send me an email right away, and I will respond as soon as I can, and we'll be in touch, and I'll give you exactly the information that you want to know. So what we're looking at here is a question in the den. Would I? It said, I'll find it. It said. Basil, I bought some KODC. Thoughts? So KODC is Eastman Kodak Company. Is trading right now at 33.22, down 9 cents. And it's gone to the leg D that we were expecting. I like this. I'm expecting that it does go to D. But a general market pullback, we're going to see now, because let me just quickly explain. So first of all, I like it, and I believe it should go higher, but it might be market vulnerable. So if you're treating it just as a quick trade, I would say, don't hang around for too long. Personally, I'd have a 50 or 60 cent stop on it from your entry point. Most importantly, I do expect it to go to a D. It's holding real well. The stochastics at 91%. The MACD is still good. So that's my assessment there. It's made a potential peak F in the 120-minute chart. It says, hey, I can go a little bit sideways for a day and a half, but I'm expecting it to rally. If it does at any point next week fight any conditions of weakness, market weakness, and it gets to 34.93, that says, I'm trying my best to get to leg D about 37.73. I'm watching this real closely because there's certain conditions that I'm looking at that I'd like to buy. So that's that. Now the next thing I wanted to talk about is this. In the general market, as I'm looking at it, I just want to sum up very quickly what I'm looking at and why I'm looking at it. The Dow has gone to leg D. Does it mean it cannot have a smash to the downside? No, of course not. Anything can happen. But I have to tell you, I've still got tremendous signs of strength inside the Dow, technically on a daily basis. I'm looking at the stochastic at 94%, and it has the fast-moving average just crossed negative, so the deepness of the fast-moving average crossing down below the red line, the slow-moving average, is going to be really important. However, when I'm looking at the MACD, it's also saying that in this particular pattern right now, I want to see that green line expand in the fast move, that I call it the fast moving average of the MACD. It's just very easy, it's convenient to do, the faster moving average. I want to see it expanding, and that's going to be important. It has strong support to Dow at 16,463 to 16,416. So consider the 16,400s very important for support. However, when I'm looking at certain stocks that have been very important up until now, at least for me, look at Ford. Ford is in leg D, possibly making a peak D, but also acting very well at 92% in the stochastic. So I'm going to make it real easy. I'm going to stick with what I've done for years now. I've talked about the VIX, the volatility index. Nice move from the lows today of 1260 to 1377. That's a clue. So if the volatility index by Tuesday of next week is starting to trade above 1475 into the 1530 area, this market, the whole market will be dragged down. Just make it as simple as that. If it stays under 14s by Monday, that's positive. Hey, stay tuned, and I'll be back at 4 o'clock.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.